Okay, let's learn what Doji candlesticks are. Okay, let's begin with the picture. It looks like this, by the way. A teeny tiny body and no body at all, with wicks on both sides. The criteria involved is market has to be in uptrend or downtrend. The open and close has to be almost same. Almost, okay. So what does this imply to us? It's just market is indecisive in nature once doji has formed. And what about support and resistance? Yes, a doji can be used as only resistance, okay, looking back in price, but not as a support. Wow, that's something new, right? You have never come across that, I guess. Let's see why though. See, for a bull run to happen, you need humongous demand and major participation from traders. To buy a stock, people take time, whether this will go up or down, see, hence they are being careful. But for a bear move, just think, if there is no demand, that itself will make the price move down automatically. Along with that, say if government announces a war between two neighboring countries tomorrow, that is a huge negative. First thing in the morning, every investor is going to dump the shares due to fear. Going up is tough, but falling down is quick in market. See, that's called emotion. Say, if you see a doji before this day and in future if price is reaching this doji, don't you think there can be same effect of selling? Yes, there should be, right? And doji being an indecisive candle itself, do you think a bull run can begin from bottom? It can't, right? So doji can't be treated as support, only a resistance marking candle for future purpose. That shows us that there would be equilibrium between bulls and bears. The trend would be changing towards neutral. And moreover, try to look for high volume candle, okay, on a doji. Okay, now tell me, in this particular chart, where all can you see a doji? Start from left side and move towards right side, okay? Do you see a doji over here? It is, right? It is. This is a doji, right? This is a doji, doji, two doji. Do we see anything over here? Yeah, here one. And this is a spinning top, not exactly a doji. This is a doji. So we have like series of dojis. Now, the criteria for, let's say, this doji, the market is in uptrend. See, if this mini uptrend, it is an intermediate uptrend, okay? Overall the market is going from top to bottom, but we have a counter trend that is happening over here. At this junction, we are supposed to identify doji, and we found doji. Doji shows us that market is indecisive. After this point, a market doesn't know where to go. But market being overall downtrend from this end to that end, it is moving downwards, right? Do you see that part? Oh, come on, not this one. Arrows. Yeah, it is moving downwards like this. So whatever mini uptrend that is happening, that is a potential trade that you can perform by shorting. And when a doji comes, it means price has turned to neutral stand. From here, the next very candle is a black candle, which means okay, the sellers has arrived and it started to continue its downward journey. Now that is one point. Now this doji can be considered as resistance. So you know how to plot resistance. Take from the wick till lower body, and this candle is a bearish candle, right? So you should consider the wick of this candle too, along with the lower body of doji. So that would be your resistance for future price movement. And once you see another doji which is along the resistance path, can you expect price to move down? See, doji is getting trend to neutral, and from here till here it is a mini uptrend, a mini uptrend. But upon reaching a resistance, you see a doji candle. How cool is that? Obviously you can expect a down move, right? You see a bear candle, bulls tried but they cried later. It fell down huge. Isn't it cool? Now we also learned doji cannot be used as support. Let us check. This is a doji. Let me draw this. Do you see any coinciding effect? Any coinciding effect with the price? Neither the price, the price just coolly breached it and it went up. There is no change in polarity, nothing. So doji cannot be used as support, okay, only as resistance. But don't mark yourself or punch yourself in your head mentioning that a doji is always resistance and from that point it will take turn. No, it may not. It depends upon supply and demand, and only until now you have learned so far only little candlestick patterns. We will learn more, okay, just wait upon it. And if I just move back, you see this is a doji, right? I'm just drawing the support previous to doji over here. You see this candle? I can draw this, right, a support, because this candle is not a doji. Of course I can draw a support. It is a swing low. Since this candle is too big, I'm gonna modify my picking zone to this candle's low till this candle's low, so that can act as my support. And a doji has arrived inside a support, okay, which means a downtrend is happening. You see a doji, which means market becomes indecisive. From there you see a bull candle and it went for some time. Isn't this a buying opportunity? See, I said from doji you cannot draw a support, okay, like this. This is not valid. But from somewhere else, if you plot a support and you get to see a doji inside the support, that is a buyable opportunity. See that? See, this is not something you must have come across anywhere. I don't know, because people just mark simply a support and resistance. If it is a doji, means oh yeah, we have an opportunity. But this is the actual rule. A doji can only draw resistance. A doji cannot be considered as a support. Okay, now let's see something different. Okay, okay, now you just saw that dojis are really good, and how do we take trades on doji? Okay, now you know that this is on a downtrend, right? This being your support, and this being your resistance, right? And okay, now for see, you know this is coming down, overall this is coming down, and you see this particular doji that happened. Let me change this color to something lighter. Yes, this is better. So yes, excuse me. So you see the doji on the support. How do you take a trade on this? Now you should usually know by now that the type of order that we will be using is called buy stop. Okay, buy stop order, because we are going to buy but when price reaches particular level. Okay, now you see this doji, this one, and you are going to take the trade when price breaks the high point of this doji. Okay, when price breaks this doji, then you take up a trade. That is your plan. So in order for this to happen, the order that you will be using is called buy stop, because price is currently over here. I mean, on the next day when candle opens here, whether it moves down or up, we don't know. Let it fluctuate as it is. But if it goes down, your order will not get executed. Okay, if it goes down, your order will be pending and it never get executed. But suppose candle moves up like this and it reaches your this zone, that means price touched your zone and your buy order gets executed and it goes up. That is your plan. Okay, so that being said, you place your buy order. Now to place a buy, I'm going to use a tool called long position. I'm going to click right above the high point of here. So this line would be your buy position. Now I'm just zooming out. Let's see. Yeah, what you are seeing on this red shade, that would be your risk. You can move your risk up and down. Now when I say risk, it is called stop loss order. Okay, now your stop loss order has to be below the support, which is around over here. Okay, and this is your target. You can move up and down as you wish. Now where can I mark a target now? Do you think this is a swing high? Correct? You can mark that as a resistance now. Let's mark it. I'm gonna pick this. Since it is a full bear candle, I'm gonna take this candle's lower body and this candle's higher wick. I'm taking that. So I can move my target until here. This is my plan. Okay, get it? Let's see what our thing is. Let me just move it a bit. Now see, if I just point out, your stop loss is having 96 points. Your target point is 280 or odd points. Your total risk reward is 1 is to 2.8 as seen over here. Don't you think this is a good trade? You can take it, right? Yeah, of course we can take it. Now next day market did this, just one candle. Market actually opened here, it went up and it triggered. Now you see a dark shade over here, dark shade green means trade is triggered. This green is pending. If it moves down, you see a dark red. Okay. It moved down. Okay, over here, do you see that? Now we are in negative territory. Our stop loss is around here. If it hits, we lose money definitely. But it went up. Now you are in green territory. Price went up. Now this candle itself is a spinning top, right? Don't you see that? Do you see that? Now what you should do when you see such candle is you placed your buy order here. Now and you picked a stop loss over here. When on trade, after trade gets executed, you can definitely modify your target and stop loss as well based on the formation of candle, right? So far you have learned long body candle, short body candle, and you learned spinning top, which is a neutral stand, and a doji, which is also a neutral stand. Now here you saw this big bearish candle and your trade will give you a negative return. That will create a fear inside you. But please think, market will give you definitely fear and reward as well. And please try to respect your trading plan. That is, you bought here, let market hit the stop loss if it wants to. Don't exit before letting the market decide whatever it wanted to do. And this is number one mistake that every trader tends to do. When they see immediately a negative return on their trade, they fear and they try to do all sorts of things, averaging down and or even exiting the trade halfway, not respecting the stop loss. See, you created the stop loss for a reason, considering how much money you are going to lose. So if it wants to be lost, let it be lost. Okay, just wait for it. What if market turns out? And it turned out. Now at this point you have a swing low right over here. Don't you think you can adjust your stop loss to swing low now? So now at this point your stop loss even reduced further, right? That is a good thing. And now if you see, let us see what panned out. Now this is a doji. Now this is where I want you to become careful at this junction, because doji or spinning top, this is not doji, it's a spinning top. At this point, if you see, these are spinning tops, right? Now spinning tops represent market is neutral, and overall your market from here is downtrend. This is just a temporary up move that is happening, and the potential resistance is over here. So when you see this candle, I need you to become careful. We don't know what market will happen. If you see a big long red candle or black candle, that is a sign that market might turn. Okay, we don't know yet. And it is again another spinning top. Okay, now we are safe. You see a bull candle, which means you can rest. This is another spinning top. Now see over here, this is your low, this is your high. Don't you think this is your higher low? Correct? Do you see that? It's a higher low, obviously. Now what do you think you can do at higher low? You moved your stop loss from this support zone till your low. Don't you think you can move your support zone to higher low over here? I cannot move this part actually to the top side, but say you don't have a risk at this point, right? Your stop loss has been negated. At this, if you move your stop loss order to over here, there is no more loss involved, because see, it's all green over here. There is no more loss. Your stop loss order at present is at this junction. Even if price turns down this much points, you can eat. That is your profit. Now it is a no risk trade hereafter. What you did was you just made your trade break even, because adjusting profit, once trade moves in your favor, you just move your stop loss to break even, which is above the buy level, which happened over here. Okay, now even if trade turns negative, it goes haywire, don't worry, you are safe. You still have some room left as profit. Now next candle, wow, see that? That's a doji. Market took a neutral stand now. Now you have your stop loss here, and you have this much profit in your hand. If market turns down, this is the only thing what you're gonna eat. But do you think you wanted the whole 10 yards over here? You could simply see you are halfway through over here at this point. See, at this halfway through, you can eat some profit, right? So what you should do is just move your stop loss from here to the next part over here, so you can eat something over here. Now let's see what happened next. It is again another doji, which means market is struggling to move further, because two doji in a row means, oh my god, that means buyers and bears are no way. They don't know what market has to be going through right now. So what you do, just move your stop loss again over here to this low. Next day, okay, you see a bearish candle over here. Now that's your sign of getting out. You don't know. Okay, and you move your stop loss from here. I mean, see, as if now let the stop loss, you cannot move the stop loss because to here, because already that low has been breached by this one. But on the other hand, there is our support and resistance theory of this one. This is a high that was broken by our price. It is making higher highs. Higher highs and higher lows as if now. See, what if this was your change in polarity scenario over here? It is possible, right? We don't know that. But since you are trusting your trend mechanism, you are supposed to buy here. Since you are already on your trade, okay, you are already on your buy trade over here, you can add one more position at this point. Okay, so you add, when you add, this is your next trade. But what happened here was you took the trade and you ended up in loss. okay, but you are still on the big main trade. But think, if your next adding position took a loss, don't you think it's time for you to exit the big trade as well? So what you do, you will take the profit that has been generated by this. So this is how much you'll be eating. 83 points. What you intended was 280 points. What you got was around 80 points. Now this is called what? Market. You decide something, market gives you something. Just take what market gives you. Don't try to force. Of course, I need 280 points means I need 280 points. No. Be flexible with your trade. Let trade work out. Let the trade pan out in your favor if the market wants to run. Otherwise, it's pointless. Okay. Just be flexible with the market. Market is the god. Market is Bhagavan. That's what everybody says so. But as per the Gujarati style, market is called Bhagavan. We don't know that, but whatever market gives, just respect it and take it. 80 points means 80 points. Still, it is profit. It's cash in your pocket. See, this is how you take a Doji trade, okay? And now you see, obviously you have a Doji over here. There is another small trade that you can take it. How so means, overall we are on a big downtrend. This is a mini intermediate uptrend. Then this is a bit aggressive part, okay? Since it is Doji can, after Doji price can move up or down, because Doji represents neutrality. And since you have two Dojis in a row, what you should do is just assume, if you have a close above, you buy. If you have a close below, you sell. Now at this point, this is the high range over here, this is the low range over here. The price did not close yet, but on this day, price gap down. We will learn about gap on later chapters. Price gap down, it opened here. See, you don't need a close, but it opened itself down below this low. You can straight away sell the shorting mechanism over here, and your trading plan has to be like this. You have understood that you are about to short over here, but the price opened over here, so your sell level has to be here, and your stop loss, the red being stop loss, let me just shorten it out. Okay, now the red being stop loss, you will adjust it to the swing high. Get the point? It's the swing high above this, not exact at a high, just have a buffer in between them, maybe 2 points, another 5 points of buffer. Now what do you think a potential target is? See, you know that you cannot draw a support from Doji. That is not accepted. This is not accepted. But you can draw a support from this big bull candle. That is possible, right? This you can draw. See, okay, and you can draw this as well, which means you have, if price breaks this support zone, it can come to this part. You took up a trade. Let's see, this should be your first target, and the risk reward ratio is mere 1.5. so for 1 rupee risk you are earning 1.5 times. It's okay, that's it, I would say. But if it is this, oh yeah, that is 1:3, awesome trade. What happened next? Oh yeah, it broke, right? See, it went to your target over here. Now that is why you have to study each candle. See, what I'm just showing is only Nifty, okay? Because Nifty is a major in trading instrument in NSE. That's why I'm just picking Nifty. We will talk about stocks on the very last chapter of this, because maybe that's the only reason you have might have enrolled this course, for find stocks now and trade tomorrow part. How do we find stocks to trade, right? Well, that is a big thing. Okay, let's don't jump into that part now. And this is how you do a trading. You need to analyze candle by candle and do it. See, from here what happened was, the first bull candle comes, bear candle, bull candle, bull. Now you don't see any dojis over here, so I'm not gonna do anything. Oh yeah, that's a doji. That is a doji, right? What do we do? If you find a doji, look back. Now we have double doji over here. What do you do? Just mark the resistance. And you have a doji that just happened now. What should you do? Simple. You place your trade just below the low of the doji. Simple. And let me choose the shorting position. This would be your entry point for sell. You will adjust your stop loss above the resistance with a small buffer. What is your nearest swing low? This is your swing low, right? What you should do? Just pull it down a little bit around over here. See, when price reaches near the zone, just be careful. Switch to lower time frame. Now this trade is risk reward ratio of 1.6, which is okay. I wouldn't say that is a big trade. Now this candle happened. You are in your trade. You just got executed. Now you are in negative. Oh my god. Oh my god. Oh my god. Oh my goodness. Baby. That is awesome. That's a big money, right? Now when you see this much big of a bear candle, don't you think there can be still a bit more downward? Now, see, of course there has to be, right? See, sellers just took over the market over here. See how awesome this looks. Bulls slowly gain, slowly gain, slowly. See, for the sellers, within one day just completely trash the market. And see, when you see this much peak of a candle, just move your stop loss to the swing high. You should just wait. Let's see what happened next. Market didn't even close below this low, which means we don't know, something bad might happen. Let's just move the stop to even the high of this big candle. What happened? Okay, we are in trend. You see, at this point, let me just even reduce my stop loss. Wonderful, right? See, you are on a support now. You are on a support. See, obviously during the time, of course, this would have been your target. I don't want to catch this thing. Let's say we will be catching until only this much. Let's say that's too much, right? 270 points. You just gathered 270 points with a risk of 90 points, and that is a total risk reward of 3 times. Isn't that awesome? Right, cool, right? You just went into the support zone. What else do you need? I mean, it is, the trading is so simple. Exactly, trading is just that simple thing. We make it complicated. So that is how you take trade on Doji. Not just Doji, you take trade on every candles like so only. We will learn about further candles on upcoming chapters. Glad that you just came across so far. Okay, I really wish you do good. Now today's homework is just start finding all the dojis on Nifty chart from 1994 till now, all the dojis, and just analyze the price action, whether it has moved up or down. If it has moved down, go back with respect to resistance, find it, plot support and resistance. You might have already done that as of now, I believe so. And look from that zones. Okay, look from the support and resistance zone, how price reflected with respect to doji. Okay, see you on next chapter.